But I think one of the things working in the Bank of Japan's favour going forward is they've also got nearly every other central bank in the developed markets trying to generate inflation, which hasn't really been the case for a lot of the period where the Bank of Japan have been fighting solo. So whether they get the 2% inflation target is very questionable, but I think they might get a bit closer to it than they have done looking in the rearview mirror.
Just confirming, you are in Buckinghamshire as well. It seems everyone's in blooming Buckinghamshire today. You are actually there, yeah?
That's right, yes.
Oh, God, I don't know why Jeff's not doing the whole show from Bucks. Our previous guest was from Bucks, a lovely county, mind you. All right, John, obviously the Japanese are stuck with very low interest rates and these huge debt piles. People are talking about the Japanification of other markets as well. Is that what we're seeing in Europe, John?
Well, this term is a bit curious to me because you've got yields well below Japan in Europe. So it's almost the Europification of Japan at times. But I think what we have seen has been very clear that the ECB have got a Vulcan death grip on the European bond market. They're not going to let yields really rise from here. They've come out very early and shown a complete intolerance to yields moving higher. And we're going to see them increase the weekly purchase rates up and above what we saw in the previous quarter. So in contrast to what we're seeing in the US, where the Fed are very comfortable with longer term yields rising, the Europeans are taking a very different approach. And the key reason for that is all about inflation expectations. In the US, you've got 5-year inflation break-evens at 2.5%, showing you that the market has confidence that the Fed are going to achieve their new goal of allowing inflation to run above the target. In Europe, break-evens are barely 1%, maybe just a little bit above that, below the 2% objective. And if anything, the ECB are going to firm up their inflation objective to be a bit more concrete around hitting that 2% target. So it does seem that we're in here for the long run with the ECB using the current stimulus that they're going to be providing for many quarters to come.